Strap in. Japan's central bank is walking a tightrope between keeping its foot off rates and the looming threat of U.S. tariffs and a cooling American recovery. It all comes to a head as the Bank of Japan, BOJ, wraps up its two-day policy meeting on Friday, with a decision due between 0300 and 0400 GMT. And here's where it gets controversial. Despite hints that more rate increases are on the horizon, the BOJ has held its short-term policy rate steady at 0.5% since January, worrying some hawks who argue that persistently negative real rates could fan inflation rather than curb it. Governor Kazuo Ueda will step up to the podium at around 0630 GMT for his post-meeting news conference, and every word he utters about the fallout from President Trump's tariffs and the trajectory of the U.S. economy will be scrutinized. But this is the part most people miss. A slowdown in the U.S. doesn't just pinch American consumers. It threatens to choke off the fragile recovery in Japan's export-driven economy. Automakers, electronics firms, and heavy machinery producers are already feeling the squeeze from higher duties. Only days after the U.S. Federal Reserve surprised markets by cutting rates to cushion a weakening labor market, Japan must decide whether to stay its course or signal a more aggressive tightening cycle. Senior economist Kei Fujimoto of Sumi Trust expects a BOJ rate hike by early next year, but cautions that October's meeting is far from guaranteed. Officials need to assess whether tariffs will crimp corporate profits and undermine companies' willingness to boost wages, he says. Without rising pay, domestic spending could stall and derail efforts to achieve sustainably higher inflation. Political uncertainty adds another layer of complexity. Prime Minister Shigeru Ishiba's resignation has triggered a ruling party leadership contest, with frontrunner Sanae Takaichi, an outspoken opponent of BOJ rate hikes, scheduled to unveil her campaign pledge at 0530 GMT on Friday. Could her stance politicize the BOJ's independence? That question is already stirring debate among economists and market watchers. A Reuters poll finds most economists still back a 25 basis point hike by year-end, but they're evenly split on whether it should come in October or be pushed into January. Global headwinds, from China's slower growth to U.S.-China tech tensions, give the BOJ ample reason to proceed cautiously, even as core consumer prices in Japan rose 2.7% year-on-year in August, above the BOJ's 2% target for the third straight month. Hawkish board member Naoki Tamura warned in late June that, if upward inflation risks heighten, the BOJ may need to act decisively as a guardian of price stability. Japan exited its decade-long quantitative easing program last year and raised short-term rates to 0.5% in January, betting that 2% inflation was within reach. Yet Governor Ueda has repeatedly stressed the need to move carefully, mindful of the unknown fallout from U.S. tariffs. What do you think? Should the BOJ press ahead with another rate hike this year? Or is patience the wiser policy? Drop your thoughts below, agree, disagree, or share your own take on Japan's central bank chess match.